Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my micro bearish scenario where we are looking for a diagonal to the downside in a wave 1 or A, followed by a 3-wave structure in a wave 2 or B for then continuation to the downside in either a wave 3 or a wave C. Now looking into this scenario, this wave 2 retraced to the 0.382 Fibonacci taken from the high to the low of wave 1, which is a rare target for a wave 2 in a diagonal structure. And also this wave 3 did not really go deep enough to validate a diagonal to the downside, as the 0.618 is a minimum target and it's already rare for a wave 3, with the most common target being between the 786 and the 886, pulled from the high to the low of 1 to the high of wave 2. If we then look at this wave 4, you can see that the golden pocket is in orange, and that is because the golden pocket for a wave 4 is a less common target taken from the high to the low of wave 3, and then you expect a 5-wave move to the downside, also in a zigzag, which at least hit the target of the 0.618, which is a common target for a wave 5 in a diagonal. So if we summarize the look of this diagonal, then wave 2 is a rare target, wave 3 is very rare, wasn't deep enough, 4 is less common, the structure looks like an expanding diagonal if at least the lower trend line is connected to the wicks. If you connect it to the bodies, then of course you get a whole different structure, a more contracting diagonal, but all in all it doesn't look too great. But in this scenario you then expect this to be 1 or A, and then you'd be looking for a 3-wave structure to the upside in an ABC, which is a zigzag, 5-wave move, a 3-wave correction, and then a 5-wave move to the upside. If we then take the fibs from the low to the high of wave A, then for a wave B, you'd be looking for a retracement to at least a 382, but all the way to the 886 is still valid for a wave B retracement, and then you expect a wave C to the upside in an A5-3 5-wave move. If we go to the second scenario, which is a bearish and then a bullish scenario, we are looking for first a little bit more downside before a continuation to the upside. In this scenario, this wave to the downside over here is a 3-wave structure in a wave W, followed by a long sideways corrective wave X, which has a zigzag in W, a corrective structure, can be any structure in wave X, and then an expanding flat ABC in wave Y, meaning wave W being a zigzag and Y being a flat is absolutely valid for a WXY scenario. In this scenario, that is then the end of the blue wave X after this 3-wave structure, for then a continuation to the downside, looking for a 3-wave move to the downside in a wave Y. And as wave W over here is a zigzag, you're going to be looking for this wave Y for a zigzag or a flat structure, which is a 3-3-5 wave move, or a triangle. Because in a sideways double combo, wave Y is not allowed to have the same structure as wave W, and as wave W is a zigzag, we can only have either a flat or a triangle in wave Y. Now in this scenario, what is important is that if we look at the high of wave Y and the end of this wave X here, and I go to the 5-minute, if this is an impulse to the upside, you can count it in a 5-wave structure to the upside, then you have a bit of a range, and then we took the high with this wick over here. So we took this high with the high that was made over here. Now you could include this structure in a potential impulsive move if you think about a 1-2 and then a 1-2-3-4-5 4-5, but then that means that this is quite a long sideways wave 4 compared to this very small wave 2, which doesn't really have the right look. So therefore, I would prefer to put the high of X over here, but that then means that over here the high of X has been taken and therefore the high of a wave Y. And if we are looking for a bigger flat to the downside in a wave Y, then this being an ABC doesn't work, because it's never going to retrace deep enough to look for targets of wave Y, where you're going to at least expect to take the low of W, if not the lows in general, and wick this low over here at 28.5k. So this already being a potential flat scenario can only result in a WXY, but that's not really valid for a wave Y, because you like to see simple structures in a wave W as well as a wave Y, being a zigzag, a flat, or a triangle. So we have to continue to observe what's happening more locally in order to give higher probabilities to this scenario, because at the moment the fact that the high is taken gives potentially more probabilities to the more bullish scenario, where very simply we're looking for this 3-wave structure to the downside in a wave W, then we have a sideways wave X, and then we have a double zigzag and then another wave Y over here. So it's a zigzag X zigzag. I know I just mentioned that in a sideways double combo, wave Y is not allowed to be the same structure as wave W, because if W is a zigzag, you want to see Y being a flat or a triangle. But in a double zigzag pattern, wave W and wave Y can have the same structure. Now in this particular scenario, the low of wave Y bounced on the 0.618, and also the invalidation is if price would move below this low over here. And now we then want to see continuation to the upside. So yes, this is then a potential wave A or a wave 1. You expect a retracement before then continuation to the upside. We are currently at resistance, as you can see over here. We're currently hanging around that weekly naked point of control at 29.225. We had a bit of a reaction over here, but we are basically currently ranging below resistance, which is more bullish if you know, general trading rules, I suppose. We do have a bit of support in case price does move to the downside, because over here, this price wicked the previous high, bit of a move down, maybe a retest, moving down again. We have some support over here, which is important support, sitting between 28,993 and 29K. If this support doesn't hold, I'll probably be looking for a deeper move to the downside towards the lows, or, and that is mainly like the if statement here, or we're going to see support over here. If price is going to go through this support area, then we can have a look at this order block, which is sitting around 28.9K, as you can see over here. So that could then be a potential order block for support, for then a move to the upside. If we then look at the CVD divergences, we do have bullish CVD divergences. We have them over here. Higher low in price, lower low on the CVD. Target is then the high over here around 30K, and also more locally, but this one already played out. We had bullish CVD divergences. The target was this high, got wicked very nicely, played out, so we can remove that one from the chart. Now if I go to the CVD chart over here, then you do see that with the most recent retracement that we got, the blue line actually made bullish CVD divergences with this little low over here. So higher low in price, lower low on the blue line, and actually also on the yellow line. So again, bullish CVD divergences, where then the target is going to be this high over here. And what I think is interesting is what I noticed before we had this little push to the upside, is that very, very locally before this push happens, you saw bullish CVD divergences. Maybe even have to go to the what this is for the scalpers here, right? That over here price was making a higher low, but you can see the blue line is moving to the downside. So there is absorption of market shorts going on the 1 minute time frame, which can give more confidence for a bit of a push to the upside. Now it doesn't mean you're going to reach like 30K, but it does mean you can expect a bit of a push, which already happened, as this now has played out. But it's just for you to be aware that if you use CVD and you see this on the lower time frames, it can be very interesting for then a continuation to the upside. And if we then finally look at the probabilities, then the least probable scenario is the micro bearish scenario, where we have this diagonal where wave 2 retraced to a rare target, wave 3 didn't really even hit a target, wave 4 hit the less common target, and the structure itself is an expanding diagonal, and by far most commonly you want to see contracting diagonals. Now the most probable scenario at the moment is that we at least see a bit of continuation, as I wrote over here as well. We expect more upside even if price would first move down, but we do have the bullish CVD divergences, and also more locally we see bullish CVD divergences building while we are ranging below resistance over here, which increases the probability of now seeing a bit of a move to the upside, where we then have to pay attention for the upcoming resistance level a little bit higher. And the one in the middle, which is the number 2 over here, which is between the less common scenario and the most probable scenario, is the bearish and then bullish scenario, where you expect a wave Y to the downside before then eventually a move to the upside. And that's then also what makes sense with the sentence I wrote over here, is that overall we expect more upside. Even if price would first move to the downside, we are expecting eventually higher prices, at least this high, to be taken. But of course, as we now have these bullish CVD divergences building against resistance as well, the most probable scenario is to now see continuation, and then of course we observe the reaction at the resistance levels, and based on the reaction that we get, we're going to continue working on our probabilities and our plans. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.